Crypto and digital assets in the U.S. has got a market cap of around $1.1 trillion right now. It's been there for a bit. Do you acknowledge that this asset class has staying power in the U.S. economy?
It appears to have some staying power. Of course, that 2.1 trillion was, what was that a year ago? A lot higher.
Yeah, it's had some volatility in large measure due to the lack of legal clarity. And so hopefully this committee will help that quite a lot here this summer.
Well, I think the rally is just beginning. We just entered what's called the seasonal period of crypto summer. There's this 4-year cycle around something called the halving, which is where the block rewards for the Bitcoin blockchain change every 4 years. That causes a period of accumulation going into that.
Why did Bitcoin explode by around 20% in the past 48H? Why is crypto going up just 2 weeks after the chair Gary Gensler said we don't need digital currencies?
We don't need more digital currency. We already have digital currency. It's called the US dollar, it's called the euro, it's called the yen. They're all digital right now.
And even after the SEC attack, the most significant exchanges like Binance and Coinbase, 2023 has been an incredible year for Bitcoin and even some altcoins, despite all these events and the recent collapse of FTX, which scared many investors away from these markets, including traditional finance companies. In the past 48H alone, Bitcoin jumped from the 26,700 price to around 30,000, and the market sentiment completely changed from neutral to greedy among retail investors. But what changed? 3 things contributed to what some call crypto's new phase. First, EDX, an institutional crypto exchange backed by Fidelity, Citadel, and Charles Schwab, went live on June 21st, allowing to trade Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. This event is important because this company positions itself as a non-custodial exchange aiming for major financial institutions' crypto exposure, meaning it's working as the SEC and the Fed want and avoiding potential lawsuits like Binance or Coinbase got. The SEC was clearly saying they didn't want the rogue companies of the world to win, but they wanted real companies who understand regulation to be involved with crypto, and that's what is happening. This takes us to the second reason. BlackRock filling for a Bitcoin spot ETF. Why is BlackRock, the world's largest asset manager, applying now amid the SEC versus exchanges crisis? They probably know something we don't. And in case you don't know, the SEC only rejected one ETF from BlackRock in 2014, so there's a significant chance it gets approved. After BlackRock filled the ETF, 2 more investment managers, WisdomTree and Invesco, have already filled theirs, starting a new moment for this asset class. These 2 events alone are exactly what crypto needed, according to Mark Yusko.
When you have BlackRock entering the fray, and also, by the way, Citadel and Schwab and Fidelity backing EDX Markets, the crypto exchange that also launched this week, what does it signal?
Look, I think it's great that the traditional financial services firms are coming around to the technological innovation that's been going on for the last really 14 years since the birth of Bitcoin, but really the last 5 years have been the acceleration. And we knew that eventually the big firms would find their way into the space, but I actually think it's a validation of one, the technology, and 2, validation of business models saying that, look, this is here to stay. Well, I think the rally is just beginning. We just entered what's called the seasonal period of crypto summer. There's this 4-year cycle around something called the halving, which is where the block rewards for the Bitcoin blockchain change every 4 years. That causes a period of accumulation going into that. That event will occur next April. That's called crypto summer. Then we usually get a speculative blow off after the halving event, and then a overreaction on the downside called crypto winter. So, last week, June 15th was kind of the bridge into the 10 months coming into the halving. It just happened to coincide with BlackRock announcing their ETF. And we're up, I think, 14, 15% since that announcement. Blockchain technology is one of the 4 pillars of the digital age, the ABCDs, as we call them. That's AI, blockchain technology, computer chips, and data. Those 4 things are transforming the way we store and exchange value. The same way that media was completely disrupted by the internet and the value of the biggest media assets went to new assets, the same thing's happening in financial services. It's a long process. It doesn't happen overnight. It happens over decades. But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
And finally, the third reason. By the court's order, Binance could settle an agreement with the SEC for the first time, avoiding the total asset freeze of the platform in the US and allowing companies like Binance or Coinbase to operate in the country as long as they follow proper regulation. That is a small win for the industry, creating an increase of trust between both retail investors and big institutions. But if that's not enough, even Jerome Powell, chair of the Federal Reserve, is acknowledging crypto as a powerful asset class.
Crypto and digital assets in the U.S. has got a market cap of around $1.1 trillion right now. It's been there for a bit. Do you acknowledge that this asset class has staying power in the U.S. economy?
It appears to have some staying power. Of course, that 2.1 trillion was, what was that a year ago? A lot higher.
Yeah, it's had some volatility in large measure due to the lack of legal clarity. And so hopefully this committee will help that quite a lot here this summer.
And even acknowledging stablecoins as a form of money, something big institutions are deeply interested in, as a solution to move money and make big payments instantaneously without paying horrible fees in the process, as Kevin O'Leary mentioned a couple of times in his interviews.
We do see payment stablecoins as a form of money. And in all advanced economies, the ultimate source of credibility in money is the central bank. And we believe that it would be appropriate to have quite a robust federal role in what happens in stablecoins going forward, and that leaving us with a weak role and allowing a lot of private money creation at the state level would be a mistake.
All these combined are creating a particular moment in crypto. Is this the beginning of the next bull run for Bitcoin and some altcoins? Bitcoin maxis say yes. Chart analysis says the 30K resistance needs to break first. Watch this video next to find out what Gareth sees in the charts. Bye.